Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Sunday the 2nd of February. In a return for the US Chartbreakers, it seems to be that we're at a rather interesting juncture as far as the stock market is concerned. As far as the S&P is concerned, triple top there at 6,100 and key reversal to the downside. Gap fill sell-off on Friday as well. That suggests that the minimum on the downside could be towards the 50-day moving average at 59.90, and at the moment the possibility there of heading down to 58.96 and the floor of that rising wedge that we've had in place since the summer of last year. This stage, early and end of day close, really a weekly close back above 6,100, negating the idea of an intermediate sell-off and also giving us the chance of heading up to the top of that falling wedge at 62.60 rather than topping out. Moving on to the stocks and starting off, limbering up with Apple, which is always a good situation to limber up with. Here the situation is that rather nasty key reversal to the downside on Friday, back below the 50-day line there at $240. Got the risk here of a move down towards the floor of that rising trend channel from May last year at the $222 level, while we're below that 50-day moving average at 240. If we can get back above that and it's just a one-day wonder, then obviously the upside there at the top of the channel and as high as $264. Next up is CuriosityStream, which I think we looked at some months ago, and looks like it's doing well at the moment. The reason for saying that is we gapped down back in November and we've gapped up to end the week, which is a bear trap island reversal, one of the strongest setups you can get. Top of the rising trend channel there at $3.20, and we're looking for that while we remain above recent resistance around $2.30. On to a stock which I don't think we've looked at before, but here we are today, Cyclerion Therapeutics, and here, as is often the case, the biotech area much stronger on the other side of the pond than it is here in the UK, bouncing off a rising 50-day line, or gapping through it, and also a resistance line there from back in September. $3.20 above that, we're looking for the top of the range, $6.50 or so, perhaps as soon as the end of next month. This stage, earlier and end of day close back below that 50-day line, and the $3 level really delaying the upside scenario. Moving on to another near-term winner, and obviously the question is whether it will continue to be that. Focus International. Here we've had a bear trap rebound from below the rising 50-day line there at $4.07. Looking for the shares to at least retest that mid-channel line there around $7.50 by the end of this month, even if they then fall back again. A stock which is also worth keeping an eye on at the moment is Journey Medical, and on the basis perhaps that this is has a double signal here, inverted head and shoulders, and we've broken the neckline there around $4.40. Above that, looking at the top of the channel there, $5.40 by the end of this month. And also backed by a rising uptrend line in the RSI window, so bullish divergence there. Probably if you're looking for a stop loss, the tightest one would be the recent peak there for the shares around $4.30. Moving along to another big name, and it comes in the form of Meta, where none of the deep seek type of shenanigans have affected it so far. Still near the top of the range, rising trend channel here from basically over a year, and you can see that we've made good progress within that channel. The channel been in place since basically this time last year, and the top of the channel there heading for $734. We're looking for that, I suppose, while we remain above the $665 level, which is the last swing low. If we're lucky, we'll stay above 680 recent resistance, but perhaps that may be too much to ask for. Moving on to one of the stocks of the moment, which is Nvidia, which obviously had a bit of a pie in the face with DeepSeek. What's the problem here? What's interesting here is that we've had quite a few topping out signals on this situation. A falling trend channel that can be drawn from September, but I suppose that's not the key thing here. We had a gap close by a sell signal back in the beginning of the year. We had an island top and over the last week, and haven't been able to get back above the bottom of that gap there, $129. While we're below that, there's the risk of a move down to the floor of the channel there, around 104 by the end of this month. But the key here is the longer we stay below the floor of that gap, the greater the chance of a move down, especially after that double sell signal formation that we've had over the course of this month, apart from a sort of a rolling top formation as well. So not looking great on Nvidia, even though perhaps DeepSeek is not as scary as it first appeared. Moving along to perhaps a happier situation, Reborn Coffee, and here the stock has very kindly told us where the top of that rising trend channel base is, which is, or was basically Friday's high, so towards the $3.30 level, and, $5.40 level, and while we're above recent resistance, around $2.70, looking for the shares to retest that $5.40 area, hopefully during the course of early February. Nice bounces for the RSI near neutral 50 and then higher as well above 60, suggesting that there's still some gas in the tank here after the initial sellers are out. Moving along to Sensus Healthcare, and here a normal looking chart with the gap to the upside off the floor of that rising trend channel, top of the channel there, up towards the $10 area, $9.80 in fact, and we're looking for that while we stay above the rising 50-day line there at $7.60 on an end-of-day close basis. But a bear trap gap reversal, one of our favorite setups, and a break through RSI 50 as well on Friday to help the cause. Moving along to Seastar, and here you've got a broadening triangle base, and shares narrowly missing the top of that triangle there, that peak, the top of the triangle there at $2.94, and we're looking for that while we stay above the 50-day line there at $2.04. So maybe some people, or $2.03 rather, maybe some people like that risk-reward situation at the moment. Finishing off with Tesla, which seemingly never has a dull moment either. Here you can see that we've got the shares basically at a mid-channel level. The 50-day line there around $398, and the uptrend line there from November, sort of the same level. Basically, what we want to see is that the shares remain above $375. If they can do that, then a retest of the best levels ever, $488, could be on tap for the stock. Otherwise, there's the risk of a move down to the floor of that rising trend channel from the early part of 2024. The worst case scenario there would be $330. But at least while we're above that upper $300 area, looking as though we could try and turn back up again. I suppose if you are cautious, you wait for the shares to break that resistance line there. Currently around $420. Maybe that's the best and easiest thing to do, given that the break of 420 could take the shares up to 520 plus over the rest of Q1 2025. That's it for me today. More updates during the week.